Everybody, Macro Ghost here, giving you the best financial content in under 6 minutes or your money back. What do you guys think of this Stack Gold Now poster? I wanted to do some. I wanted to look at gold. First of all, Bitcoin is looking terrible, and I was calling this. I was saying beware that if we go into the Gaussian and we close in the Gaussian, there's trouble. The Gaussian channel is quicksand. It acts as quicksand. It just pulls Bitcoin down. It's done that for the entire life of Bitcoin. The weekly Gaussian channel. I've covered this in both the shorts and in some longer videos. I want to keep this under 6 minutes, so let's get going. Gold, I did a little bit of a deeper dive on gold, and I wanted to spend most of the time here telling you why I think what I think. And this is a monthly chart, so if you go back to here when gold started breaking out of its monthly resistance, this is resistance here, breakout, fake out, tried, breakdown, tried again, and then boom. This actually covers 2004 to 2011, 7 years. So I put this in bars, 84 bars. And gold was mooning at the time because there was so much uncertainty in the mortgage market and the debt market. Gold will do that. Gold will go up when there's uncertainty in a market. Debt, equities, currency, commodities, it will start going up as a safety trade. And then what you'll see is it'll top and then it'll go down, but it'll go sideways for many, many years. So it'll go down, but then it'll find its bottom and go sideways. So that's why people like gold. It's an unproductive asset. It's an unproductive precious metal. What I mean is it doesn't produce anything. Copper, rare earth, uranium, they all produce things. That's why I'm so bullish on them. Gold doesn't produce anything, but gold is valued as a safe haven asset against all other assets. So when it goes up, you can expect all other assets to go down. And what happened between 2006 to 2010, equities nuked. They nuked off the face of the earth while gold just mooned. What we have here, this is a very important point, ladies and gentlemen. This was before quantitative easing. This was before manipulating the US dollar down to 0% interest rates for 18 years. That's what the Fed did at the time. They put rates down at 0% and they kept them there for 18 years. And then they just started raising rates in 2021, or 2022. Anyway, gold is now going to moon again. And I drew it out for the same time period, 84 bars and the same percentage at least. And I say at least 330% from the breakout because there's now currency manipulation going on. Whereas in 2004 to 2008, there wasn't really currency manipulation as there is today. So I say at least it could go 330%. That gives me a target price of $8,500 per ounce of gold. But it can go much higher. Some analysts are saying $18,000 per ounce. And I give you a time frame so I could say you're pretty safe to buy this on dips. I would look for a dip here around 3,700 to buy that because I don't think it's going to nuke. I don't think it's going to come to 3,200. I think that this rally has big legs and you want to be buying the dips 3,600, when it starts consolidating so that you catch that next leg up. Buying pumps, it's not really optimal. It's not something I look to do. So be really patient with gold. It'll give you multiple opportunities, I think under 4,000 to buy, and just keep stacking it to the moon because that's where it's going, because the US dollar is finished. And it's finished because, I say that because the US dollar needs interest rates to be, the US economy needs interest rates to be low. Okay? Why? Because that's the only risk-taking behavior that the market likes in America. Okay? So the Fed funds rate starts with the Fed funds rate. This was 95% back 2 months ago. It's now 40. So they're not looking to decrease rates now. So that's kind of bad for gold. You can get a dip for gold, but when Donald Trump's Fed chair gets in June, they're going to look for an aggressive rate cutting policy, which is going to bring risk assets back on. Okay, it should bring liquidity to the market, but it also should entice gold to keep mooning because when you decrease rates, you decrease the value of the dollar. That's a correlation. Why? I can go into why. Because when rates are low, the world market is going to look for higher rates to park their money. Where's the higher rates? Maybe Germany, maybe Brazil, maybe Hong Kong. Wherever they can find higher long-term, higher short-term rates, they're going to park their money. So when the U.S. doesn't care about that, the U.S. cares about cheap money. They want to incentivize people to borrow, and that takes lower rates, and that's what's going to get Bitcoin and shitcoins and stocks. But gold will really start to moon when the interest rates come back down to zero, because that's a depreciating US dollar. So that's, if you don't understand everything I said, it's okay. Leave a like, leave a comment, subscribe, turn the notifications on to all content, because they go default to personalized notifications. Turn them on to all. You're going to want the content that I push out. It's always going to be free. I never charge. Finance should not be fucking charging money for anything. Post it all out there for free. Let the YouTube algorithms take care of the rest. That's what I'm all about. And I want to see other people save money and make money. And hopefully that was under 5 minutes, but under 6 minutes, but I don't think so. Anyway, look for gold to go up in the long term. So if you're an investor that likes long-term returns, stable returns, look to gold. I do think Bitcoin is done until probably September next year. August, September will be a great time to buy it. I look for the Gaussian channel to just keep bringing it down. So I look for any bounces. I'm gonna sell those bounces. I'm gonna buy the MicroStrategy Daily Target ETF, which I'm already up 50% on. 50% from just buying, like, where did I buy? This is a daily chart. I bought this thing here. I'm almost up 50% on it, so I'm really liking that. And I do expect a pullback in this, and that's where I'll just get long again. I think MicroStrategy is going to go back to zero. So that's all for today. I hope you enjoyed this content. I hope you stuck with me to the end here, and I'll see you next time.